Learning market trends with AI prompts. Markets move fast. It can feel overwhelming to know what really matters. With the right prompts, you can use AI to break down complex market trends into something you can actually understand. This video is for education only. Always check with a licensed financial advisor before making any investment decisions. Prompt 1. Analyze the last 5 years of performance for a sector or index. Highlight which areas have been the strongest and which have lagged. Include revenue growth, profit margins, and stock performance. For example, if you analyze the S&P 500, AI might show that technology had strong revenue growth driven by semiconductors, while certain consumer sectors struggled with shrinking margins. Looking at multiple years helps you separate lasting strength from short-term noise. Why it matters. Multi-year patterns reveal consistency. They show what keeps performing when the hype fades. Common mistake. Too many people focus only on the last 6 months. That can trick you into thinking a temporary rally is a long-term trend. Prompt 2. Forecast 3 possible scenarios for the next 12 months in an industry or market. For each scenario, identify the key metrics to monitor, such as interest rates, earnings growth, or commodity prices. If you run this on the energy sector, AI might create one scenario where oil prices climb due to production cuts, one where renewables expand as policies shift, and one where global demand weakens in a slowdown. By pointing out signals like supply data or government reports, the AI helps you track what to watch instead of just reacting to surprises. Why it matters. This trains you to think in scenarios instead of absolutes. You will not get blindsided if the market does not go the way you expected. Common mistake. Beginners often look for one single correct forecast. The truth is that professionals always plan around multiple possible outcomes. Prompt 3. Compare the performance of 2 sectors over the last 3 years and explain the main drivers behind the difference. Include valuation ratios, debt levels, and earnings surprises. For example, if you compare technology with energy, AI might explain that tech outperformed partly due to higher earnings growth and investor willingness to pay higher price-to-earnings ratios. Meanwhile, energy may have depended more on cash flow and balance sheet strength. When you see these drivers side by side, it makes the reasons for performance differences much clearer. Why it matters. Seeing side-by-side comparisons sharpens your understanding of what factors truly move sectors. Common mistake. Many people only compare price charts and ignore fundamentals like debt or valuation. That leaves you with half the story. Prompt 4. Explain how alternative data sources are being used to anticipate market shifts. Ask for specific examples of when this data signaled changes before official reports. AI might show you that credit card data flagged weaker consumer spending before quarterly earnings confirmed it. Or that satellite images of shipping lanes highlighted slowdowns before trade data was released. Why it matters. Alternative data can give you a leading indicator before official numbers come out. That is often where professionals get their edge. Common mistake. A common trap is treating alternative data as a guarantee. It is a signal, not a prediction. You still need to confirm it with broader market data. Prompt 5. Simulate a stress test of your portfolio under different conditions, such as a recession, high inflation, or rising interest rates. Break down the impacts across equities, bonds, and commodities. AI could show that stocks might drop in a recession, bonds could weaken if rates rise, while gold or other commodities may strengthen during inflation. Why it matters. Running a stress test helps you see vulnerabilities in your portfolio before real events test it for you. Common mistake. Too many people only plan for growth and ignore risk. Skipping stress tests is like driving without brakes. You will not notice the problem until it is too late. If you like this information, do me a favor and hit the like button. It really helps the channel and tells the algorithm to share this with more people. Save it so you can come back to the prompts later and share it with a friend who is trying to understand the markets, and follow Wealth Flow Daily so we can keep bringing you more safe and practical strategies you can trust. These prompts are not financial advice, they are research tools to help you learn and have smarter conversations with your advisor.